Assalamualaikum and hi everyone. Today we are going to discuss a common test question May 2020, and this is on the topic Malaysian Conceptual Framework for Financial Reporting. So let's start. So the first question is question 2A. The conceptual framework contributes to the stated mission of the MASB. The mission is to develop standard that brings transparency, accountability and efficiency to the capital market. It will serve the public interest by fostering trust, growth and financial liability in the economy. So let's look at what is the question. So this is the requirement. You are asked to describe the objective. So the objectives of the general purpose financial reporting that was chosen in the conceptual framework. So meaning that you cannot simply write any objective. You need to write those that are mentioned in the conceptual framework specifically. So if you can refer to your previous notes, you can check that in your notes or in your textbook. But this is the answer, which is to provide information about what? About the reporting entity, the information that is useful to the existing and potential investors. These are the users of the financial statement and financial information, lenders and other creditors. Must make sure that all these are in your answer. In doing what? In making decision for these users to in whatever decision that relates to provide resources to the entity. So that is the general purpose financial reporting. Now let's go to this next question, which is the question that asks you on the fundamental or the underlying assumption that is prescribed in the conceptual framework. Actually, there is one fundamental underlying assumption. You are asked to explain the assumption. The answer is going concern, because the assumption is that when entity prepare a financial statement, the entity is assumed as a going concern company and that it will continue in operation for the foreseeable future. So this is the keyword that you must make sure that it is in the answer. And you are also assume that the entity will has no intention to liquidate or curtail materiality the scale of its operation. So that was for 2 marks. Next question is on the enhancing qualitative characteristic or EQC. Enhancing qualitative characteristic is the characteristics that is actually supporting the fundamental qualitative characteristics. So don't get mixed up. This is enhancing. So you need to explain only 3 out of the 4 enhancing qualitative characteristics. So the first one is comparability. So it is about comparing similar information about the other entities or comparing the same entity for another period. And the most important thing is that for consistency, the key criteria is actually consistency to achieve the comparability. So to be comparable, the methods that are being adopted by the company must be consistent. So that is the key criteria. Next one is verifiability, where verifiability is assuming that users will have the information to faithfully represent the economic phenomenon that the company or the reporting entity purports to represent. Different knowledgeable and independent observer here, for example, the external auditor would be able to reach consensus to verify the financial statement, so that the financial statement faithfully represent the economic phenomena. So although it is not necessarily in complete agreement. So that was the second characteristic. The third characteristic is timeliness. You can answer any 3. It's about availability of the information to the decision maker just in time to help or capability of helping them to influence their economic decision. The older the information, the less useful it is. So you can check your textbook or your notes on this timeliness. The next one is understandability, where it is about having information that can be understood and read by the users of a financial statement. And also the users are assumed to have reasonable knowledge of the business and economic activities. They also are assumed to have reasonable knowledge on accounting and has a willingness to study the information with reasonable diligence. So you need to answer only three characteristics. Any three will give you 2 marks. So therefore it will give you 6 marks. The next question is the question on this scenario-based question, which is about a Maju Jaya. So identify who is the reporting entity. Maju Jaya is a company based in Johor, so it's Maju Jaya. And the company is the main supplier of the Formosa woods in Malaysia. So it is the supplier. There are raw materials used in the production of cabinets. So these are what being used, raw materials for manufacturing of raw cabinets. You need the woods and the television cabinets as well as tables. So these are the usage of it. Okay. Next, you have another company which is Lantera. So Lantera is another company that ordered the Formosa woods amounting to 45,000. So this is the amount, 45,000 on 10 of March. 2 days later, Maju Jaya delivered all the materials, meaning that all 45,000 worth of goods are being delivered, and not only delivered, but that it is also being received, right? And at the same time, when Maju Jaya delivered the good, it received payment from the total invoice being billed. You bill the invoice to Lantera. So the 50% of the total payment, meaning that 22,500, 50% from this figure for 45,000. So 50 for 22,500. And on 31st of March, Maju Jaya received the remaining amount, meaning that 50% was received somewhere in March. Yeah, but the remaining amount, the remaining 22,500 remaining, were received somewhere in 31st March. So 2 days later means it refers to 10 March. So plus 2 days. So it's 12 March that you received the first payment. The second payment was received on 31st of March. So what is the question? You are asked to explain whether or not Maju Jaya is a liability. So if that is the case, Maju Jaya is going to be your supplier. Supplier or other entity. So in this case, Lantera is going to be the reporting entity. So meaning that we are looking at the point of view of Lantera. That is the reporting entity. So we are Lantera now, and Maju Jaya is our supplier. So we're going to look at whether or not Maju Jaya is still a liability or not to Lantera by 31st of March 2020. Remember, by 31st of March 2020, the payment were fully received, yeah, by Maju Jaya from Lantera. So it means that Lantera has made full payment. So let's look at the answer. Before we look at the answer, I would like to review this. For a liability to exist, if you can recall in the lecture, 3 criteria must be satisfied. One is there should be a present obligation where that normally arise through contractual agreement, and it should also be a potential to transfer economic resource, meaning that let's say Lantera is the reporting entity, there will be a liability if there are some let's say amount owing that has not yet been settled or paid by Lantera to Maju Jaya. So we have to check on that, whether there is still a potential to transfer a liability. And again, the obligation is a present obligation, meaning that there is a present obligation as a result of past event or a transaction. Next, let's look at the answer. So this is how you do it. First, you need to mention about whether or not the goods were being received, because that is a proof of past event. So on 10th of March, the goods order, that was the woods by Lentera, the reporting entity, from Maju Jaya, which is the other entity, which is our supplier, worth how much? 45,000 were received. So meaning that there is already a past event, because it was not just an order, but the order has already been received by the reporting entity. So there is a past event. Second one is that to look at whether or not there is still a potential to transfer an economic resource to the other party. So here, potential of Lentera to transfer money to Maju Jaya out of the goods that were being purchased, you need to settle. So if you can check, upon the receipt of the woods ordered, Lentera has already made payments of only half, which is 22,500 of the money owed. And because of that, there is still a potential to transfer an economic resource to the other party. However, for the to Maju Jaya, um, whereby for the remaining half, right? So that will reduce Lantera bank balances. That is the entity's cash flow. So at the somewhere 12th of March, when you receive the payment, 2 days later, only half, right? So there is still a potential to transfer economic resources. So meaning that number one is fulfilled, number two is fulfilled. That might be a liability. However, if you look at the criteria number three, whereby is there still a present obligation? In our case, there is no present obligation anymore to transfer any economic resource. Why? The remaining balance, that was 22,500, was fully paid when? On 31st of March 2020. And therefore, the obligation or the present obligation has been fully discharged and settled by Lentera, which is the reporting entity. And because of that, Maju Jaya is not a liability. So you shouldn't show Maju Jaya as accounts payable in the books of Lantera, because there is no more present obligation that exists by Lantera to pay any remaining balance or any remaining amount owing to Maju Jaya. So that will give you 5 marks. Okay, that's it. That's the end of the answer. I'll see you when I will see you, and all the best. I will see you again in the next video. Thank you for watching, and Assalamualaikum.